Crude oil prices have been pretty wacky for the last few months, but recently they've been climbing. I don't think that climb can continue. Watch the video to find out more. Hi, this is Tim from TradingStrategyGuides.com. Crude oil prices have been climbing since that fateful day in April when we discovered that it could actually print a negative number. Nope, I didn't know that could actually happen, but I don't think this current bullishness is sustainable, and the chart seems to bear me out. Today's trade pick is a bear flag on light crude oil futures, and I think the flag is weakening. I'll show you that in a few minutes, but first, let's get an update on the active trades. And later on, today's trading maxim. Welcome to Monday. Remember to click the subscribe button and hit that bell so you don't miss any of these great trade setups. Let's take a look at the active trades. Tesla is still making this tiny bull flag right here. So I'm encouraged that this could pop up here and hit our first target very soon. Will you look at that? McDonald's gapped up here on Friday, hit our target, so I closed half for profit and moved the stop to break even on the second half. I also turned the parabolic SAR on right here, and we'll wait for that thing to track up here to the break even right here so that we can start to follow stops on this one. The US dollar, Mexican peso, pushing down pretty hard right here. Looks like it is attacking this level right now on Sunday night. Looks like it could break to a new low. That would be nice. Stop loss right now is at 23.0644, locking in 6,873 pips. That sounds pretty wacky, doesn't it? By the way, in Friday's video, I think I misquoted the pips on this by a factor of 10. I always have to think through the pip counting on the USD Mexican because it's such huge numbers. Anyway, we've got quite a nice move going on here. These are the bread and butter trades of our strategy. This is where we make the big bucks, so to speak. And Royal Caribbean gapped up nicely on Friday as well. Just waiting on the parabolic SAR to move up here now so that we can start trailing the stops on this one. However, this is such a huge move right up here, and it's likely to retrace quite a bit. In fact, you'll hear traders say that gaps have to be filled. I mean, I don't know if that's true or not. Gaps seem to get filled a lot, but I wouldn't blame you if you wanted to take off more profit on this one right up here if it stays up here on the open tomorrow. Of course, this is Sunday night, so we'll see what it does tomorrow morning. Dollar Swissy popped right up here on Friday and hit our stop on our second half. So we got some profit on this, but I'm done with this one for a while. And lastly, but not leastly, Canadian dollar, Japanese yen is moving up very nicely, pushing up hard. We're waiting for the PSAR to get up here so we can start following stops on this. With price moving up this hard, it shouldn't take very long for the PSAR to catch up. And that's it for the active trades for right now. Let's take a look at today's pick. I like to watch crude oil, and like many folks, I was floored when it dropped down here to minus 40 in April. I honestly didn't know it could do that, but it has to do with the fact that no one was buying oil and all the storage facilities were filling up and they were running out of place to put it all. So the producers were having to pay exorbitant prices for storage. I know a couple of traders that lost quite a bit of money on this move. Anyway, lesson learned. Since the contract rolled over, it's been in a pretty steady uptrend right here. I'm seeing this bear flag here, but I'm also seeing a bit of a weakening in the bear flag. You see, for the last several weeks, it has not been able to make the top of the bear flag up here. Just to make sure that we're all on the same page, a bear flag consists of an incoming downtrend like this one here, and then an ascending parallel price channel like this. A bear flag is a bearish consolidation, so I will only take a sell trigger on this. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. So here's our trade plan. We will sell a daily candle close below the bear flag. On the breaking candle, to enter a full-size position, we want to see the volume bar reach the volume average right here. If it doesn't quite reach the average but does reach 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by taking the volume here, dividing it by the volume average. You should get 0.75. If you don't get at least 0.75 on that, I suggest that you stand aside on this trade. The stop loss is 1.5 times the ATR, and the first target is 1 times the ATR. So let's say this thing breaks right here and closes right there. Just ahead of the close, we will take a sell, and we'll take a look down here on that day at the ATR, multiply that by 1.5, measure that distance above the entry, and that will be our stop loss. Measure 1 ATR below the entry, and that will be our first target. If after entering the trade we get a candle close back in the bear flag, we'll take our loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the flag should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. Second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's the setup today on light crude oil futures. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today's trading maxim, number 62, make your decisions in advance of the emotions. Make your decisions in advance of the emotions so you don't have to make them in the midst of the emotions. You know, trading can be very emotional, especially if you're trading your own money. Price moves up and down, and every second it's an emotional roller coaster. The only way to navigate all this movement is to have a plan of battle. Your battle plan has to have contingencies for every possible event that can occur in the market, so it should be well thought through. That way, when you're in the heat of battle, you don't have to make a decision as to what you should be doing. You made that decision before the battle when cooler heads could prevail. That's how you become a successful trader. Remember our crude oil trade plan for today. We're going to sell a daily candle close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. Also, don't forget to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, free. I'll put a link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. And don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. And don't miss the next installment of the Trading Education series on Wednesday when I'll discuss what is swap in currency trading. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. Have a great week, and I'll see you Wednesday.